What happens if they, I'll grant you, let's say they pause, right, but they don't cut? How much do you need a cut to get your 20%?
I don't even think the Fed would even have to cut, because once they pause, which is now, the Fed went from 5.1's the terminal rate to we're pausing at 4.75, it raises the bar for them to start hiking again. So I think that the bond market would interpret that as the start of a cutting cycle. I think rates would come down. Of course, this will worry the Fed. That's why we're hearing tough talk. But if inflation data comes in soft, I think everyone's going to be on the same page.
So a pause alone is enough for a huge rally in stocks?
Yes. Yeah, in fact, I know folks talk about earnings could be down this year, which I think is a possibility, but...
Well, is it a probability or a possibility?
I think it's only a possibility, because the dollar falling is a tailwind for earnings. And... but if earnings are down since 1950, it has not been an important factor for if stocks go up or down. So it's volatility. The VIX is a much more influential factor.
Do you think the market's going to overlook the fact if earnings come in even lower than where projections have re-rated them to already? Markets going to overlook that?
Yeah. In fact, I think that's. We can look at it even just now. Tesla missed on delivery numbers. It's at 120 now. I mean, I think stocks are already showing you that you could have bad news, but if it's priced in...
Well, I mean, yeah, we're going to use Tesla as the litmus test. I mean, that stock's already gotten from a multiple of 80-something, all the way down to 20.
That's kind of why it's interesting. If you look at what's correlated to financial conditions easing, it's tech, discretionary, and industrials. These have been doing well. They're kind of telling us financial conditions will ease. But also, these stocks shouldn't go up if earnings are... these should be the ones getting hit by earnings, and they're going up.
What about tech? It remains the biggest... I don't even know if I should say biggest question mark, because it seems like the questions have been answered. The stocks were overvalued. Even the mega cap stocks that deserve to have a premium valuation don't necessarily deserve the premium that they even still have now, which has been compressed as well.
That's right. Tech's been a darling. It was over-owned. They got expensive. Now people think that they're going to derate forever. But we know that if the market is bottomed in October, tech has always led off a bottom. Tech is also how you cure inflation, because that's how you reduce wage pressures. And if the multiples have come in and financial conditions ease and rates fall, then multiples should go up. So tech has tailwinds this year that didn't exist last year.